Hello, my YouTube friends, and happy Saturday. I hope you're all doing well. So, before I forget, before we get into the video, tomorrow I am going to be doing a live. I always forget to advertise it. It's been up on the platform. It's going to be at 8:30 a.m. If you noticed it before, it was originally at 9, but we had something scheduled a little bit later in the day. So, I wanted to make sure I had some time to do the live thing. I love the platform. I hope some of you can make it. Hopefully, it ends up fun and we get a few people showing up. But if not, like I said, I like the platform. Happy to talk with just a few of you. It'll be 8:30 a.m. tomorrow, so I hope to see you there. So let's get into that video today and talk about a few things. I'm going to go straight into what I'm going to call my diamond in the rough, which the funny thing is I typically advertise against that because I think the best things to invest in are the best companies, which I find are right in front of our face. I mean, look, we just had earnings week and Amazon, Google, and Meta all had great earnings, and they're three of my top holdings. So I really encourage people to buy what's easy and don't kind of look around everywhere for what's not so easy. Now, that being said, as always, you need to do your own research. Please use my content as entertainment purposes only. This is not investment advice. So, what's that diamond in the rough? I've talked about it before a couple times. I still love Portillos. And there's so many things I love about Portillos, which is not just their food. I love them as an investment as well. They closed on Friday at $13.88 off of their lows only 3 months ago. They're up over 62%. Nobody's talking about it. And the reason nobody's talking about it is they're such a small company. I don't think anybody cares. Their entire market cap is under $1 billion. What I think is cool about that is whatever investment you make, if you stick with it and they actually grow, will be a significant percentage of the company. And I think it's super cool to be able to own a significant percentage of some small company that you think is growing. Currently, Portillo's has 84 stores or restaurants in only 10 states. That gives them a ton of room to grow. And those of you not familiar with Portillo's, they're originally out of Chicago, so a lot of their menu is like Chicago-based food. But they have a phenomenal Italian beef, they have a great Chicago hot dog, and then it expands from there where they've got burgers and fries and all that other stuff, as well as like barbecue ribs and salads and desserts. Like they have this really famous chocolate cake that people go for. They have a whole bunch of things in a wide variety, which leads me to my only complaint. When I've listened in on quarterly reports and the the earnings reports and what the CEO talks about, my concern is they're consistently focusing on the menu. I think that sounds great and everything, and of course they're a restaurant, but the focus should be on the growing of the stores, cutting costs, and how to grow the business at this point. You don't see McDonald's consistently changing their menu and adding all these new things. I know they put up specials from time to time and do a McRib or whatever, but for the most part, that is not where their focus is. Their focus is their earnings and their sales. I'd like to see Portillo's go that same direction, where the meetings don't talk about the things they might add to the menu, and it really is focused on where they're opening up new restaurants, where they see as a good place to expand. I think that, there's certain locations that this food is just going to resonate with, and I don't see a whole lot of competitors that serve the same product. Like I know that restaurants are super competitive, but I don't know too many chains across the country that are doing Chicago hot dogs as well as Italian beefs, as well as all the other things they do. And if you go to one of the stores, not only are they super busy, but they've got drive-through. I mean, the one out in the suburbs in Chicago, because my brother still lives out there, I think they have 4 or 6 lanes or something outrageous for all the cars to be able to go through, and they're always backed up, as well as they're busy on the inside. You can also order online, and the establishments are really cool. They separate different sections, so if you want to buy ribs, that's in one location. If you're buying hot dogs and Italian beefs, like that's in another area. It's really neat how they set it up. It's kind of a fun environment. And I think as they continue to expand, they're going to do great everywhere they open. They're also only trading at a 33 times current price to earnings ratio. For a new company that's just growing at the pace they're growing, I think that's a real steal. Not only do I have some shares already, which for full disclosure, but I plan to add on this week before earnings. Now, earnings are going to be on Tuesday, so I'm probably going to buy some on Monday. Be prepared, the stock could shoot up a good bit, it could shoot down a good bit. It's a bit of a risky time to be taking that investment, but I really want to own this company, and I want to own it for 10 years. When you're buying a company like this that's this early on in the stage of development, you can't hope to just hit a home run over the next few months or do extremely well. There is still in that growth period. You have to hope that you're correct about what you foresee for them and then give them a real amount of time to do that, which is probably a minimum of 10 years. It takes a long time to open up new restaurants and get them established and get them going. But Portillo's has a real good shot. They have a great product and they seem to be really well run. I hope to see that continue, and that's one of the investments, like I said, the diamond in the rough. Don't miss out on the stuff in front of your face, though. Like I said, this was a huge earnings report, and all three of the mega caps that reported did exceptionally well, no matter where their stock prices went. Their earnings were really good, their revenues were really good. Meta downplayed their future earnings a little bit, so it prepared people that maybe it doesn't grow at the pace that they have been. But they're not talking about a slowdown. They just kind of took the highest end of their estimate off the tables, saying maybe that was a little optimistic. The funny thing is, I don't know if it is. They continue to crush it. The only thing I worry about is that this year being an election year, and since they're really an advertising company, maybe they got more advertising because of the election. I guess we'll see going into next year, but I'm sure they're aware of that. I'm sure they're aware of what percentage that is, and I'm sure that the investors, and I don't mean you and me, I mean the guys that are investing for these billion-dollar funds, that they're well aware of this stuff as well. Both Google and Amazon crushed it as well and had phenomenal earnings, which is really cool to see. I think you don't have to look too far to find great companies, and I think great companies tend to outperform over time, and you just stick with what the obvious ones are. As much as I talked about Portillo's and as much as I'll be investing in them, I don't know that it's necessary. I think depending on how much money one has in their accounts, that they want to be rounded a bit to protect themselves from the ups and downs of markets. But I'm actually trying to get a little bit more pointed in my account because I want to try to outperform the S&P. You guys need to figure out what your goal is, but that's been my goal for the last few months that I've really been thinking about. Instead of being quite so rounded out, to maybe get a little bit more pointy in the account, narrow down how many different stocks I own, and put more into the ones I think are best. I don't mind buying Amazon here, even at $200 a share. If it drops, it drops. I still think they're a great company. Their guidance has been really good. And I think their advertising space is going to be one that could really grow. I'm hoping they could actually increase the options that you can watch on the Prime Video to compete with Netflix just a little bit. I don't expect them to compete with Netflix, but it would be nice if they can start driving that revenue to build that space and really have some better content on the channel. Maybe even do their own shows similar to what Netflix does and whatever else. And advertising has such great margins, it's a really good ability to be able to push that end of their company. The cool thing about Google, if you were able to see my video on them, is they even crushed it in the Google search category, which was kind of what the concern is ChatGPT and the others are taking over and able to search the sites for free without really paying the revenue that you and I do, that their search was in jeopardy. Well, I think what's tough about that is similar to Kleenex, right? We all call a tissue Kleenex, or a lot of us that grew up that way. When you say, oh, I'll do a Google search, it is not as simple, I'm going to do an internet search. We even call it Google. So I think that gives them a huge advantage. And as AI pushes along, maybe their Gemini space takes up more and more of it instead of their competitors that are coming along. Since we simply think of it as a Google search, that's a really valuable asset. And not the search in general, the asset of that we call it a Google search. Even back in the day when I might have gone to Yahoo, I even called it a Google search when I would go to Yahoo or one of the others. If that continues, that's what's going to be good for Google. It's really cool to see them beat on the search end of things. Their web services are growing as well. And then they have all those ancillary businesses. And of course, Meta, who I just think is awesome, did really well as well. Now, if you're like me, you have rates on your mind and the Fed meeting coming up next week as well. So, what do I see going on? Because the best rates we saw was the day before the Fed cut rates 50 basis points. I know that confuses people. I see it in my industry because I do mortgages. And if you're moving here to Las Vegas and you need a realtor, just reach out. I'm happy to connect you with one. My wife does real estate, and I also have friends who do as well. I'm happy to connect you with an agent out here. And I love Las Vegas. I think it's a great place to live. But little plug, we'll move on to the rest. Um, so, what do I see with rates, and why is that the case? Because what the Fed really controls is the overnight lending rate that banks borrow and lend at. They're not controlling the 10-year and the 30-year. They have weapons in their arsenal that they can, but that really isn't their goal and what they're trying to do. They would like the economy to kind of be the economy and then maybe guide it along. I think they're in a really tough position right now where unemployment is becoming a bit of an issue. It hasn't spiked, but places are laying people off and the hiring is slowing down, and they can see the writing on the wall of the problems that could cause. However, inflation isn't really going away the way that they had hoped, so they have a tough balancing act. I think at the next meeting, they're likely to cut a quarter point like they've prepared us, but I also think the rhetoric coming out of Powell when he does a speech afterwards is how they're going to be data dependent, and he also make people think that they're not going to be able to cut as much as they thought originally. I'm not sure, but they're probably still more restrictive than they need to be. But it's possible the markets got ahead of themselves, and either it's going to take longer or there may not be as many cuts as people expect. Either way, I think that's why the market's reversed in terms of the interest rates. But I also think that you're going to see the yield continue to uninvert. However, since the market has moved so far already in advance of this meeting, I think when he does that, you might see a knee-jerk reaction of rates get worse, so they're going to go higher, which means people will sell off bonds, for it then to reverse and people start buying bonds and rates get better. Well, why would rates get better when he's indicating that they're going to cut less and it would make sense to go the other way? Because what tends to happen is the traders and the investors at these large institutions prepare for that type of announcement and put those trades on in advance. And when you do it and there's all of them doing the same thing at the same time, they generally put on too many contracts for what the market really needs to get out of it. Their analysis is really good, but when JP Morgan and Wells Fargo and all these other fund managers are buying bonds in advance of a meeting, pushing or selling bonds, pushing yields higher, and the price is lower. When the market finally gets the news and all the investors like you and I start going, oh, wait a second, I should sell bonds since they're not going to be able to cut as far as they need to, there aren't enough of me for them to be able to get out of those positions they put on because those positions are so massive. So I think what happens is you see some rhetoric that makes it sound scary, as if rates are going to continue higher for longer, which was the original one, still being able to cut rates. You're going to see yields go up a little bit, and then all of a sudden the yields are going to start drifting back down until we get closer to the next Fed meeting. Now, it's really hard. I don't know that I'm right about this. I really don't. That's just my prediction because we feel so stretched right now going into the meeting, and everybody's expecting whatever they're expecting the Fed to say. The interesting thing is I see the inventory in the real estate picking up as well. Now, the concern is we might have a correction. The problem is I've seen the same thing this time of year for the past couple of years. So every year around the holidays, I see inventory pick up. I start to think we're going to have a correction. And then come February or March, there's no correction. And by the next summer, prices have drifted higher again. Do I think that's what's going to happen again this year? Probably. At the same time, take it with a grain of salt, because in my head, I'm thinking, oh my God, there's so much more inventory. I think we're going to see a correction. Mortgage rates are still high. The prices of homes are still expensive. And now there's all this new inventory coming to the market. How could there not be a correction? Don't know. Just telling you, when we expect it is generally when it doesn't happen. And then that's where the gloom and doomers really bother me the most, because I think talking people out of buying a home or buying stocks or buying investments of any sort is a huge mistake. I think it's good to invest and save your money, no matter what's going on in the economy. It's really tough to time it. And I don't want to scare people out of making investments. I think that that's a terrible thing to do, because don't go buy a car or whatever it is instead and spend your money. If you save, one day you're going to be really happy that you saved. If the prices go lower, hopefully you're in the position to add on and save more for when they go back up and you'll have a bigger position on. But at least put away and save for your future, instead of blaming the government and not putting away and listening to all these people on YouTube telling you that the economy is going to collapse and don't buy this and don't buy that because you'll be able to get it cheaper. Oh, great. If that happens, I guess we have to just move with the storm and adjust accordingly and do the best we can. Oh, and I almost forgot. The only company of the mega caps that I didn't like their earnings was Apple. Now, I own a little bit of Apple, but it really is only a little bit, because it's hard for me to justify their valuation. They're not growing as quickly as the other companies, and I don't know that I see the path of how they'll be able to. And they generally figure it out, and they make a ton of money, and they have a good product. It's just hard for me to justify their valuation. I still think they're a great company, and maybe in time they'll be at a price where I want to dig in deeper. But it's just so expensive in terms of price to earnings ratios. It really doesn't make sense to me up here. Again, you guys do your own research. I know tons of people who love Apple products and live and die by them. So it is what it is, and that's a great space to be. Um, just my thoughts on it. And it was the only one out of the others that I didn't love the earnings. Even Chevron, I was happy with. And I hope some of you have been able to pick up a little bit of Lululemon and seeing how that's been drifting higher. It's been pretty cool. Hopefully that continues. It seemed really cheap, under $300 a share. I didn't even realize it's up to 320, so that was a pleasant surprise as well. I hope some of you were able to get in when it was down at the bottom. I'd like to give a shout out to Ryan Williams, Russ at Dapper Dividends, and Joseph Carlton, all whose channels I really enjoy and I kind of watch religiously. They have great content that I get a lot of good ideas from them. Similar to what I say, don't make your financial decisions on any of it. I don't either. But I still look into the things that all three of them talk about. I like their personalities. I think Joseph does a really good research on some of the stuff he does. I think all three do, to be perfectly honest. So if you're watching my channel and you're not familiar with these guys, I'd probably take a minute to watch some of their content as well. There's no, I'm not getting, nobody's asked me to. I'm just sharing my opinion of the guys who I still like out there. You know, I do watch a lot of the gloom and doomers because I find that video content interesting, and I think some of them are really good. There's a guy out here, Jerry Abbott. I love his channel. He's actually waned off a bit where he sees a correction, but I don't think he's as gloom and doom as he used to be. I really enjoy his channel. I find it super interesting. We just don't always see eye to eye in terms of what we think about the market, but that doesn't mean I don't think it's a good channel to watch. I take time to take a look at his too. And then there's Orlando Miner, and somebody who I turned off, Travis, I forget his last name, but he's too emotional. He gets too upset in conversations, because I don't mind telling people what I disagree with, which is why I say to you guys in the comments, like, feel free to tell me what you disagree with. I don't get upset about it. I like arguments, and I don't even think of it as an argument. I think of it as a discussion, but I like arguing against and for, because you might change my viewpoint. So sometimes it's good to be able to open up and listen to the other side of something, to be able to recognize where you might be wrong. Like, I have no issue all of a sudden having this turn in my brain of like, oh, I didn't, like, maybe I was wrong about that. Travis gets so worked up, like, he's never wrong. He's been talking about the market collapsing for the past, I don't know, 2, 3 years. Orlando, I kind of think he just does it to get views. I could be wrong, but even them, they've gotten tired of just talking about the real estate's going to collapse, because I'm guessing it hasn't quite happened yet, and it becomes a hard rhetoric. I do think it looks better now that there's more inventory and we've seen some price corrections, but I think it's unique to different areas and not, globally or even countrywide. Anyway, if you could do me a favor as I'm wrapping things up, do me a favor if you haven't, smash that like button. It really does a lot for the channel. If you haven't subscribed yet, if you could subscribe to the channel as well and make the comments like I talk about, that does a ton for YouTube's algorithm. It helps me out more than you know. And I think it's been really cool watching the channel grow, seeing subscribers come in. I want to thank all you guys because it makes it more fun. And I'm sure I'll see some of you tomorrow at the live chat. So have a great day. I hope you had a great week. Make lots of money. Be healthy. Say hi to your family. Have a great day.